Time now for the word on Wall Street. Top investors watching your money. Joining me now is Verdence Capital Advisor CEO Leo Kelly. And also with me here on set is Mark Tepper. Mark, I am going to start with you with these markets. Futures obviously are kicking off what looks like a strong day today. We are back open after the MLK Day holiday and, of course, the inauguration. And it looks like investors are anticipating more to come from President Trump's economic agenda as he starts his second term. Now, he did announce an emergency price relief plan for American families, ordering the heads of all executive departments and agencies to do the following: lower the cost of housing, expand supplies, eliminate administrative expenses and rent-seeking practices that increase health care costs, eliminate requirements that raise the cost of home appliances, create employment opportunities for American workers, eliminate climate policies that increase the cost of food and fuel. You say, typically the first year of a new president is the best for stocks, but we've got this president. Your reaction?
Well, look, obviously, financials and energy have been doing very well since it became clear that President Trump was going to win the election than he actually did. Less regulation, lower taxes, those are all great things. And we were talking about AI last hour, Cheryl. We're going to need more energy. The immediate solution to providing energy to the data centers that AI needs, the immediate solution is natural gas. So you need to drill more for natural gas, you need more pipelines, you need all that stuff, and that's great. When it comes to the first year of a presidential term as it relates to the stock market, the best performing sector is financial. Second best is healthcare. In 12 of the last 13 first presidential years, the financial sector has outperformed the broader market. We expect that to continue. There will be less regulations and issues surrounding mergers and acquisitions, so we expect financials to do well. Healthcare, on the other hand, a lot of bad news priced in, Cheryl. A lot of RFK fears, but those fears are kind of undue. Vaccine manufacturers may face some headwinds. If you're a manufacturer of processed foods, you're going to face some headwinds if RFK is confirmed. But if you're like an Abbott Labs that makes medical devices, you should have no issue. So I think there's some opportunities there.
There's definitely a push and pull, to your point, between some of the actions by the outgoing Biden administration before the incoming Trump administration. We saw red dye eliminated. That was one. And also they're now, there was this directive to push for Medicare to cover things like it was 15 different medications, and also one of them, well, it was Ozempic and Wegovy and some others, but having those costs covered, so that could affect those companies, to your point. Leo, we are in the middle of fourth quarter earnings seasons right now. Things are picking up. 3M reporting this morning a double beat, comp sales up 2.1%, fastest growth rate they've ever seen in the company's history. They also forecasted further growth in sales and profits this year, but they do say they're going to be watching Trump's tariff plan, quote, very carefully. Stock is up 5.25%. Netflix, they report after the bell tonight. Procter & Gamble, J&J come out tomorrow, and then American Express and Verizon come out on Friday. Leo, your thoughts on earnings season so far, in particular as these major American corporations are now pivoting to a Trump presidency?
Well, I don't think there's any question that now we have, it's a whole different set of rules. And really why people focus on some of the particulars around what Trump did yesterday, I think the big picture is less regulation. And so you have two main drivers for these multinational companies. We're going to lower regulation on one side, and tariffs of some sort will be coming in on the other side. Now, I think the point was made earlier that these tariffs really, for Trump, are a negotiating position. I've always said about Donald Trump, everything he says is to move the middle point to his favor. And so I think you're hearing a lot of bombastic remarks purposely so that he could get the advantage on that tariff negotiation. So we think it's going to be a good year. Our bigger concern is with the consumer who looks tired. They're still fighting. They're still spending. But we're starting to see some problematic delinquency rates. We're seeing credit card debt get higher and higher. And so I think we're going to have this push and pull with the economy all year long.
Can I point out one thing, though, Leo? And this is what kind of got my this had me raising my eyebrow this morning. So basically, this is part of the instruction. This is what he is saying, but not what was done. Federal agencies instructed, study trade policies, recommend actions. But part of it was He's asking these agencies review policy on counterfeit goods and a tariff exemption for goods under $800. That's according to a White House advisor. What do you make of that? Because that's the inflation story.
Yeah, I have a different opinion on inflation. I think all of this is a good start. It's going to take a long time for all this to sink in. Lower energy prices will kick in as supply increases. This is all good. But I think it misses the main point when it comes to inflation. Inflation is here for one simple reason. There's too much money in the system. We've had the Fed too aggressive coming out of COVID. The government has spent too much money. And so all of this is a distraction from the problem. Moving interest rates up and down, that may have a temporary impact, but if we're going to fix inflation for the long term, we have to fix the actual problem. I think these moves by Trump can be helpful. They'll be offset by some tariffs, but these are all short-term plays. Really, if we want to fix inflation and get this back right, and by the way, it normally doesn't get fixed in one swing of the bat. We see traditionally inflation spikes numerous times when it gets to the levels we saw a couple years ago. So I think people have to settle in. This inflation story is going to be here for a while, and it's going to ebb and flow.
Real quick, Mark, before we go, we've only got a couple of seconds with you. But, you know, one of the things that we have seen with the inflation headline numbers is energy prices have come down. We expect that to continue. But there has been some sticky numbers with food, with goods and services, and as well as food. Final thought.
Yeah, and I mean, hopefully that comes down. Now, the one thing I will say is you saw oil prices over the course of maybe the last month or so start to go up because President Biden did not think you needed sanctions on Russian oil for 3 years and 11 months. And then all of a sudden, as he's about to walk out the door, he wanted to make sure that higher gas prices would be a Trump problem, not his problem. So President Trump is going to do everything he can to make sure that's not an issue for American consumers.
There you go. Mark, you're going to stay with us all morning long. Leo Kelly. Leo, thank you for being here. Appreciate it.